Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. After the gyrations of March, April proved to be a month of calm, perhaps more closely associated with the eye of the hurricane now than I would have liked to know, as the month of May started off with a major move lower. Prices dropped down and out of the previously highlighted zone between the very recent 50% Fibonacci line at 33,860 overhead and the 61.8% Fibonacci line at 32,250 of the same move that was below. Last week, prices challenged and broke down through the rising short-medium moving average, currently 31,015, closing consecutively below it last Friday. This week, prices started by dropping sharply down to the April 2011 high at 27,955, where we are currently situated. Now, this April 2011 high is the start of a small band of old and new support between the late March low at 27,020 and the April 2011 high at 27,955. Now, within this band, we have the May 2011 high at 27,330 and the December 2021 uptrend currently at 27,900. And coming up slightly from below is the rising medium moving average, currently at 26,660. Hence, whilst prices may have dropped easily down from the break lower from the 33,860 to 32,250 zone, with only the short medium moving average holding up the fall, it is now a different scenario that the market is approaching, as I perceive the support may be starting to become more substantial. However, should prices drop below the medium moving average, well, then we may have the start of a more bearish scenario than what we've seen even so far. That brings the long moving average into play, currently at 23,040, as well as the significant low from late February at 23,855. Until then, just keep a close eye on the band below between 27,020 and 27,955, as well as the slowly rising medium moving average. Even if prices do hold there, please also keep an eye out for the action from the mid-March to date turning into an inverted cup with handle pattern. A quite strong bearish pattern if it does happen. LME 3-month zinc. In my recent commentaries, I'd chosen on occasion to take a step back and look at the monthly charts for this weekly commentary rather than usual daily charts. They gave a better picture, and the context was also clearer. From these monthly charts, I noted a significant pattern that is still in operation, plus a second pattern that was forming. The principal pattern was the 2015 to 2020 bullish Andrews pitchfork. The most recent event involving this has been the market last week moving down through the middle time, currently at 39.26. This is not such a major event as you would have believed given that the scale and size of the pitchfork, but it is noteworthy. The second pattern is the one that is still in formation and also in operation, is, if you ignore part of March action, is the 2020 to date ascending wedge pattern, expanding wedge pattern. That's currently between 34.39 and 46.59. Okay, so I know I have to ignore the explosive spike part of last March's action, but to be fair, on a monthly basis, whilst it has been breached on the upside, the market still hasn't seen a close outside it, not as yet. Hence, this pattern is still valid, though interestingly, in this month we may well see it undergoing pressure, but on the downside, and soon. All these patterns are labelled on the daily chart, so looking directly at the daily chart now, you can see that the origin of the latest moves lower stemmed from the indecision seen in mid-April upon approach to the combination of the upper trend line of the ascending wedge pattern, and that's previously spoken about, and it's currently at 46.59, and the 2006 previous all-time high at 45.79. Prices have dropped down through all the moving averages, bar the long moving average, which is currently at 34.89, and most recently halted yesterday at the February 2018 high at 35.95. Now, I've recently also drawn a bearish Andrews pitchfork for the early March to mid-April action, and the upper time, currently at 39.42, though breached, has been pretty good at showing the bearish angle of attack of this market since mid-April. Thus, we have a situation where the most Recent bearishness is soon to come into contact with the underlying, let's assume it is superficially bullish for the moment, the bullish looking ascending expanding wedge pattern. Now, let's look at the ascending expanding wedge patterns on their own. Well, for starters, they are not usually bullish. Just over half of the time, this pattern ends up with a bearish break lower. However, if the price breaks upwards, the quality of the move higher is usually seen as better than the breaks lower. We are still far away from the lower trend line, currently at 34.39 of this pattern, and it's way too early to start talking targets on the downside, but I thought you ought to know these things ahead of time, just in case. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. Here comes the final bit.